Hello and welcome to yet another Equity for Keeps video. You may have heard that Amazon has released a free video game, um, a game that is pretty much like the popular Fortnite. Um, that was probably last week or thereabout, and that brings us to this piece written also last week by the CEO of Schaefer's Investment Research. And in this piece, he began by saying Jeff Bezos and his Amazon.com empire have their hands in virtually everything and are showing no signs of letting up. Now, Amazon is eyeing the video game sector. Just last week, taking a giant step forward with the launch of Crucible, a free-to-play online game similar to the vastly popular Fortnite. As the other online e-tailer prepares to take a giant bite out of the $120 billion industry, it puts video game maker stalwart Electronic Arts in the crosshairs. During these unprecedented times of social distancing and isolation, video games have moved up to the forefront of being a safe outlet for at-home entertainment. According to the first quarter of 2020, Games Market Dynamics US report from the NPD Group, overall total industry consumer spending on video games in the US reached a record $10.86 billion, an increase of 9% year on year. Advertisers are taking note as well. Individual games for consoles and computers had the most dramatic increase in ad spend. Writes ad Aegis Elias Liefering. Spending by game titles increased by 60% from $10 million in January to $60 million in April. The question now becomes whether this trend persists as lockdowns are lifted, the summer heats up, and people start to head back outside. So in this piece now, they've done the analysis, and we're just going to pick up a few quantities, and I think the average they talked about here mostly is the 20-day simple moving average, and they also towards the conclusion they have that Electronic Art is on the list of 25 best stocks on the S&P 500 during the week of Memorial Day. Okay. So we'll just leave this piece now. We're going to put this piece, the link to this piece, so that you can probably subscribe to their service and read up this piece. We have subscribed to this service for more than getting to 20 years now. So it is based on their own philosophy that we also formed our own philosophy. So we are proud to associate ourselves with Schaefer's Investment Research. So we come down here, and this is the summary page of Electronic Art, and we can see here, this is for 5 days, the chart for 5 days. Then we can see a few quantities over here. We can see the put call ratio for 1 day and that 30 day, they are the same, indicating that 37.5% of all options are puts, and then the rest, the 62.5 are calls. So the option traders are largely on the puts, on the call side of things. It has a market capitalization of 33.9 billion, enterprise value of 29.1 billion. There's a spread there, and a short interest of 2.1%. Hardly eye-catching, but you can do things. That will probably be, in terms of money, it's just simply it's 2.1% of this 33.9 billion. So that will be $333 billion, $334 or 34 million 330, okay, call it 340 million dollars in possible buyback ammunition. Yes, it is something. And so we the sort of criteria we normally use, we say the stock must have the said stock. The stock must have closed above the simple moving average 60% of the time over the last 2 months. It has done that. We'll go back to that chart and you see that. And the last 8 of the 10 trading days, it has easily done that. And one standard deviation is that we're talking about 68%, 68.1%. So it could mean anything. It could be that at least 68.1% of all its closing prices have closed above the said moving average. And this moving or trend line, this trend line is the moving average, 20-day moving average, and be within one standard deviation of the said trend line. And what would that mean? Okay, one standard deviation is we're talking about the 68% of the data set. So so if we're talking about 20 days, we're talking about 20 days, then easily this is even way beyond one standard deviation. It doesn't fall beyond, it falls beyond one standard deviation. We're talking about up to 3 standard deviations. So maybe one standard deviation is not exactly what we're going to, it probably doesn't fit that in very well. It's fit in there very well. The put call ratio, we have mentioned that. And then the short interest, we've also mentioned that. Then the MACD, we're just going to look at these other ones. The MACD, and that's the only thing we're going to look at. And then and also point out a few things that also has happened. So we can see that since the 30th of March 2020, it has remained above the simple moving average. And the simple moving average is this curve, red curve here. And then what else can we see here also? So one indicator of the MACD, the crossover. A crossover indicates that an upward momentum is about to occur, and you can see it lies right at the, see where it lies? It just lies right here. You can see it. You can see it. It just lies right there, and that occurred on the 26th of March 2020. So already, it seems from this, it's evident that this MACD, we're not going to conclude about all of them, but this particular one was a lagging indicator, because already let's not just call it a lagging indicator. It just recorded accurately the occurrence of an upward momentum. So even though thereafter also there was a slight pullback below that simple moving average, but this definitely, people definitely responded to this for sure, because you can see that from thereafter, we have seen an upward movement that has not abated since the 27th of March. That upward movement has not abated since, and has remained up there up till yesterday, the 15th of what? No, sorry, this is this is not right. Let's see what it is here. This should be the 27th. Yes, it has not abated. Even though yesterday, Okay, on the 26th, it tested that it got some support from that simple moving average, but it has not abated. So this MACD does work, and for us now, since we have not seen any other recent pullback, we're not going to go in. So there's also another crossover here. This crossover occurred okay, and also exactly this is but it's I think it marked a decline or thereabout. But absolutely as well, after that we have also seen we've seen an upward momentum as well from 111 to 119, an increase of $8, so that is close to 8% or thereabout, so people have evidently responded to two of those crossovers in March on the MACD, for sure. We can see that this undulations here definitely indicate some sort of squeeze, and that is obviously when people are going in and going out, something is driving them. It could even also be the short interest, even though it's not exactly tangible, but it's still something. It is worth, it can influence this sort of very minor shock or shock undulations. So it is an interesting chart to look at, and its MACD definitely created an easy picture for us to look at. Okay, thank you very much for watching this video, and please don't fail to subscribe to our channel. Thank you very much.